Good morning. Welcome to Money Talks, your intel on the Philippine markets and the economy. I'm Regina Lay. In the headlines today, a last-minute term-sharing deal hashed out between Senate President Tito Soto and Senator Loren Legarda averts another leadership coup in the upper chamber. January inflation, which was released just half an hour ago, comes in at 2%, faster than December's 1.8%. And House Majority Leader Congressman Sandro Marcos counters Tourism Secretary Cristina Frasco and says it's better to abolish the travel tax. Good morning. Still the top national news today, the would-be coup in the Senate. Senate President Tito Soto has confirmed that he and his allies foiled a plan to unseat him after he entered into a term-sharing deal with Senator Loren Legarda. The minority bloc was supposedly courting Legarda, who is part of the majority, so they can get the numbers to oust the tandem of Soto and Blue Ribbon Chair Senator Ping Lacson. The senators took a long break during the plenary session yesterday to hash out the deal, and when they came back, it was Legarda who took to the rostrum and called session to order.
Thank you very much, Madam President. Madam President, nice to see you on the yes, session resumed already, right, Madam President?
Yes, session is resumed.
This was all allegedly kicked off by a leaked draft of the Blue Ribbon Committee's report on the flood control scandal, which recommended criminal charges for senators including Joel Villanueva, Jinggoy Estrada, and Cheese Escudero. Former Senator Bong Revilla Jr. and former Congressman Zaldi Ko were also on the list. The draft was withdrawn shortly after, with senators saying they still need to discuss it. Lacson was then asked what he would do if his colleagues lobbied to take out names of legislators that are to be charged.
Anong problema? I'm not willing to sponsor something na hindi ako naniniwala at saka yung hindi aligned to sa realities. Maski patanggalin yung pangalan nila sa recommended for filing of criminal and administrative, pinapailan na nga sila eh. Yun ang yun sa akin, that's the sensible part of it. Kung hindi namin recommend, inibisiga na nga. Saan naman kami lulugar nun, di ba? Para naman kaming ewan.
The Philippine Statistics Authority has just released January inflation figures, and let's take a look. Headline inflation ticked up to 2%. For the breakdown, let's get out to our mobile journalist Amy Atienza, reporting to us live from the PSA offices in Quezon City. Amy, what do you have?
Good morning, Reg. The Philippine Statistics Authority recently announced that we have a 2.0% headline inflation rate for January 2026. The main drivers for this, of course, on the housing, which USEC Claire Mapa has announced that the rentals has a huge weight on how these are affecting the prices increase. So other than that, we also heard that the transport also has a negative inflation with regards to the January 2026 rates. This just means that with a 2% inflation rate in comparison to the 1.8 inflation rate that we had last December 2025, this means that prices are rising much faster than before. Reg?
So it's looking like the prices are tempering, or at least the rate of increases for the prices are tempering. But Amy, usually it's the culprit for higher inflation rates are the vegetables and meat. What do we know about it this time around? Is that what's causing the numbers to tick up as well? Headline inflation figure at least.
Well, here in our report, food inflation is actually at the national level actually recorded an annual increase of 0.7%. So that's of a 0.5% compared to the 1.2% last month. So we're seeing that there is a slower increase in these prices, but at the same time, if we're also going to look back at the major commodities that really affect this upward trend in the inflation, food is still there. We see food and non-alcoholic beverages looking at the 22.2% share in the upward trend of inflation, and it's actually one also of the biggest contributors. But leasing is the main factor here right now that we're talking about, especially because of course, what Yusek Mapa said, because of the rentals and also how the water, electricity really affects on the increment of prices for this month.
Well, good to see that the increase in vegetables and food, well, food inflation in general, was still seeing just some moderate gains for now. Thanks for that live report. That was mobile journalist Amy Atienza, again reporting to us live from the PSA headquarters in Quezon City. In other news, S&P Global Ratings says the Philippines remains poised to outperform its regional peers. That's despite the slowdown linked to the flood control corruption scandal. The debt watcher said the country's credit metrics are still expected to improve over the next 1 to 2 years. It added narrowing fiscal and current account deficits could strengthen the government's credit buffers. That's enough to support a higher rating. However, it warned that the widening probe into anomalies in flood control projects and the resulting political fallout could slow that progress. S&P affirmed the Philippines' triple B plus credit rating late last year, citing above average growth potential and a strong external position. It also maintained a positive outlook, keeping alive the government's bid for an A credit rating within the next 12 to 24 months. All right, with January inflation data just out, question is, what does it signal for interest rates, growth, and the markets this year? Let's talk this out with former Finance Secretary Gary Teves. Secretary Teves, good morning. Thanks for joining us on Money Talks again.
Thank you very much, Rage, for inviting us. Good morning to you and to your listeners.
Good morning.
Viewers.
So the first thing I guess I will take off from is the inflation figure, which we just got, inching up to 2% for January. That's up from 1.8% in December. Still pretty benign, I would say. But what do you think? And what does this say about the room to maneuver for the Bangko Sentral when it comes to the interest rates?
Well, the target rate of Bangko Sentral for the inflation rate is anywhere from a low of 2 to 4%. So we're still below the median, but of course, I think they will try not to go beyond the median. And the economy is not moving very fast, so there's still room for some adjustment in the policy rates. No? So as far as interest rates are concerned, it's still manageable. And BSP has always been governed by data-driven and evidence-based circumstances before they make a decision.
When you say the interest rate is still manageable, do you then agree with some of the economists and analysts who say that, well, it could still go down to 4.25%, 4.25%, as opposed to, well, at the moment we're at 4.5%?
Yes, I foresee the BSP to make up the decision of bringing down the policy rate by 25 basis points. So that's the reason why I think it is important to try to stimulate the economy. But at the same time, as we know, the economy is not only governed by the decision of the central bank, but also it's very important that the government and the private sector will assist in the supply side of the inflation rate so that it will still remain manageable, hopefully not more than 3% this year, or preferably still within the 2 to 3%. No.
Let's look at the bigger picture now. You touched on something very important, which is the economy is a little bit slow at the moment. The numbers bear that out. Of course, 2025 growth came in at 4.4%. I mean, that's the slowest in more than 10 years, barring the pandemic. The pandemic, of course, was a black swan event, so that doesn't count. But what did you make of those figures, and where do we go from here?
It's slow. It's very slow, as you said, the slowest since 2011, except for the pandemic. There will still have to be some uh, challenges. There will still be some challenges, and I think the economy will probably go anywhere between 4 to 5%. What's important is those reforms in the budgetary process, the private sector getting more involved, the government trying to continue with their work in the ease of doing business. All of these things are necessary to be able to grow better than what most economists are predicting, which is about 5%. So for the meantime, I don't see the economy growing more than 5% unless there are some more changes. And the accountability feature of these reforms will really be felt by the people, and the level of confidence will go up. So I think more momentum will take place within the second half. There will be quite a number of work to be done, investigation and so on. Hopefully, there will be some results out of all this investigation. This will have an overall effect on the confidence of the people and the investors as far as the government is concerned. No.
And as far as you're concerned, are you seeing enough good reforms being rolled out? I mean, you touched on budget reforms, which we saw in the GAA of 2026. But even then, there are some critics who are still saying that there are unprogrammed appropriations in there, which shouldn't be there in the first place.
Well, I don't have the details of unprogrammed appropriation, but it's something that most people will have to appreciate. Unprogrammed appropriations, Reg, are necessary from time to time because the budget is prepared about 12 months before the actual budget is presented by the president or to the House of Representatives. So, like a corporation, there are some things we cannot anticipate within a 1 year period. So, unprogrammed appropriation, for as long as they're limited, well studied, and probably not more than 2 to 3% of the total budget, would still be important. The thing that has made unprogrammed appropriation quite difficult and challenging is because of the previous insertions of Congress with respect to their pet projects and remove some of the items under program and put them under unprogrammed. These are the things that are difficult and should not be tolerated. Things like funding for foreign assisted projects, counterpart funds, they should remain under the program appropriations and not under unprogrammed appropriations.
So not all UAs, unprogrammed appropriations, are bad. Some of it do go to the correct programs. But Secretary, I was looking at an interesting chart the other day, which was tracking the movement of the peso. We are now at an all-time low, of course, hovering around the 59 to 60 range. In your time, I think, if I'm not mistaken, it was around 46 to the dollar. Is that right? 45, 46?
Yes. Yeah, occasionally it move even lower than that.
Right.
No. But anyway, it's probably
it-
about that, between 45 to 46, yes.
Is that a concern? Are you concerned when you're looking at the local currency and where it's headed at the moment? I mean, there's every expectation it could hit 60 to the dollar in this first quarter.
Well, I'm not really that concerned because, the peso to the dollar or the peso to the basket of currency is really something that should be allowed to move by its own, to seek its own level. Because peso depreciation in relation to the dollar or basket of currency rates has really its winners and losers, no? And if you look at both winners and losers, they're more or less even. So I would think that on the net, they should really be allowed with at best a minimal intervention, the so-called managed float by the Banco Central. And Banco Central is really governed by what I called earlier. They're really data-driven and evidence-based. So to the extent that they manage it, to the extent that they intervene, it will really be very, very careful and mindful of too much intervention. So I'd rather that we don't peg any exchange rate, any peso to the dollar rate. Let it flow, but with a little management from the Banco Central. No.
So you're all for a little bit of intervention. What's a comfortable level that you want to see it at? Or conversely, what's the ceiling for the peso before you hit the panic button?
The peso and the dollar is the most difficult
Yeah.
factor or variable in economics. That's difficult. I'd rather not say anything. I'm not involved anymore in government. I'd rather keep it quiet on my own.
Fair enough.
I've already given a signal that let it float and with a minimal intervention of the Banco Central. No. Mm.
Right, that's the key, minimal intervention. And lastly, Secretary, are you seeing what needs to happen to the broader economy now? Of course, as we've just talked about how it is, we need to see a lot of reforms, especially off the back of the flood control corruption scandal. What else is needed at this point? Once upon a time, you talked about economic cha-cha, charter change. Is that something that needs to be brought back into the conversation, or is there another recourse here?
Not now. Usually, it's best to talk about the cha-cha reds at the start of any administration because people might have a different notion of what this cha-cha is all about. Some will think that it will be an excuse to extend the term of existing officials. I think the problem right now is really to focus on the reforms that need to be put in place, the implementation of these reforms, especially in the budget, because the budget accounts for about 22% of the economy. So, apart from the reforms that they have established, the next thing is the implementation of the budget, monitoring, and making sure that funds are really put in place. I mean, they're really going to be allocated to those projects that have been approved. So there has been an improvement. The Oversight Committee of Congress, together with the Department of Budget and Management, should work together. Civil society should continue to assist. So all of this will have to be observed by the people and enhance their confidence that the government is really serious. And also very important is the accountability feature of these reforms, which means some people getting jailed, so that really a combination of reform and accountability will really boost the confidence of the public and confidence. One more thing, Reg, if you don't mind,
Yes, go ahead.
about the interest rate. I think it's very important that the people realize how the BSP will conduct this decision or will hold this decision when they meet. But I trust the Banco Central to continue with the evidence-based, data-driven, and it's important to provide that signal to the public because it's important for the public and the international investors to know that the BSP is really doing its best to make sure that the economy will move in the right path.
Yeah.
But together with the support of the government and the private sector, because it's really this inflation is really a joint effort, even an all-nation approach
Yeah.
to maintain it at that level, not more than maybe hopefully not more than 3%, but
Yeah.
anywhere between 2 to 3%.
Yeah.
No.
But certainly you're right. Accountability is going to be key to bringing back confidence in the economy. We are with you there, sir, but we'll leave the conversation there. Thanks so much for your sharp insights. That was former Finance Secretary Gary Teves. You're watching Money Talks, coming right up. House Majority Leader Sandro Marcos pushes to abolish the travel tax once again, despite Tourism Secretary Cristina Frasco's warnings. And the Philippines reclaims its spot as the world's #2 exporter of bananas. The details when we return. Welcome back to Money Talks. I'm Regina Lane. House Majority Leader Sandro Marcos is doubling down on his proposal to abolish the travel tax. That's despite concerns raised by Tourism Secretary Cristina Frasco. Congressman Marcos said he respects Frasco's position but argued that funds collected from the travel tax have not been fully maximized. He earlier filed a bill seeking to scrap it, which currently ranges from 1,620 pesos for economy class passengers to 2,700 pesos for first class travelers. Frasco warned that removing the tax could deprive the tourism sector of a key source of funding for infrastructure and development. And here's how Congressman Marcos responded.
I respect Secretary Frasco's opinion, but honestly, TIESA has a abysmal reputation in terms of absorptive capacity, and actually the funds that are allocated to it are very scarcely or hardly used as efficiently as possible. In my opinion, I think if you look at last year, 7.7 billion ata ang nakolekta para sa travel tax. I think the multiplier in terms of the economic effects that the abolition of travel tax will have will be much higher than that of the TIESA allocating the funds that the travel tax goes to for projects that haven't necessarily had the highest impact. But I actually had a meeting with SecDecGo of the Department of Finance this morning. Full support po siya sa bill to abolish the travel tax, and he assured me that kung ano man ang pondo na pumupunta ngayon galing sa travel tax sa higher education, ay hahanap sila ng ibang source.
Still on transport, the Philippines and Japan have signed a new loan agreement to rehabilitate the Metro Rail Transit Line 3 or MRT3. Foreign Affairs Secretary Teresa Lazaro says the funding will restore MRT3 to its original as-designed condition, allowing for higher capacity and sustained long-term performance. The loan amounts to 21.6 billion yen, or that's about 8.18 billion pesos. That's payable over 40 years. The Japanese embassy in Manila said it includes a 10-year grace period at an interest rate of 0.8%. The rehabilitation includes replacing mainline rails, overhauling train vehicles, and upgrading critical systems such as signaling, power supply, communications, and station facilities. Completion is targeted by October 2029. Japan earlier released the first tranche of the loan in 2023. That's worth 18.4 billion yen to begin repairs on worn-out tracks and train cars. Checking on the markets now, chip stocks under pressure and investors jittery about the new AI tool sent the Nasdaq to its worst two-day drop since April. The tech-heavy index tumbled yesterday by, 1.5%, while the S&P 500 also shedding off 0.5%. And in contrast, the Dow rising by about 0.5%, undisturbed by all of the market sell-off. Benchmark 10-year Treasury yields tick up to 4.277%, while gold prices advance just a tad to 4,920, but that's already coming off the recent sell-off. U.S. futures pointing to a mixed bag when the markets open later tonight, Manila time. The Nasdaq rising by about 0.5%. The S&P climbing by about 0.3%, and the Dow falling by, more or less flattish at this point. Asian markets also, let's take a closer look. Bit of a mixed bag as well in early trade this Thursday. Japan's Nikkei 225 leading the charge, up about 0.2%, while South Korea's Kospi has shed off. Oh my, that's a bit of a sell-off, 2.3%. Sorry, I couldn't see the board there. South Korea's Kospi, a bit of a sell-off, getting dragged by, I suppose, the AI-led sell-off in the U.S. ASX 200 also looking a little bit flattish at this point in time. Let's take a look now at the Philippine stock markets. Opening Thursday higher, a tad higher by about 0.4%. Now sitting at 63.98. The stock market slid by nearly 0.5% as investors decided investors decided to pocket gains ahead of today's inflation data release. The broader all shares index sitting at around 63.72 at the moment, down by about 0.1%. Local counters also looking a bit of a mixed bag this morning. As for the Philippine peso, it opened a tad stronger. Look at that, 58.95, at least below the 59, the all-important 59 level. Peso weakened yesterday, though, by 8 centavos to settle at 58.97 against the greenback. That's after tensions between the U.S. and Iran heightened over reports that the American military shot down an Iranian drone. But of course, broadly speaking, the peso has been losing ground since the start of the year. And 10-year government bond yields ticked up to 5.958% at the moment from the previous close of 5.945. So a bit of a gain, but still marginal at this point. Okay, and to end, there's a bit of good news. The country, or the Philippines, has regained its footing in the global banana market, emerging as the world's second largest exporter in 2025. That's after a strong production recovery. Preliminary data from the U.S. Food and Agriculture Organization show the Philippines climbing to second place globally, behind Ecuador. Banana exports jumped by about 26% to nearly 3 million metric tons last year. That's up from about 2 million metric tons posted in 2024. The FAO said shipments rose as local production recovered from damages experienced in recent years, and that's also helped by fresh investments and government support. Higher output from the Philippines and Ecuador also lifted global banana exports last year by about 5% to nearly 20 million metric tons. Still, the FAO noted growing competition in China, which is one of the Philippines' key markets, where suppliers like Vietnam are also offering lower-priced bananas compared to those coming from the Philippines. Still back on the market and top 3 market for banana exports at least. But that is it for us today on Money Talks. I'm Regina Lay. Catch us again tomorrow at 9:30 a.m. Kapatid, we are one news, all sides, all the time. Have a great day ahead.